Hello and welcome to the first edition of Business Incorporated for the week. I am Bosin Amafaye here in Lagos. Today on the program, the International Monetary Fund today released its latest world economic outlook. And global stock markets down, but metal prices rise on Trump, Brexit and geopolitics. Plus foreign investors to snap up about $11 billion of Egypt's local treasury bills and bonds. Now let's look at the details. Now, the latest edition of the World Economic Outlook is due for release today by the International Monetary Fund. A statement from the IMF in Washington says a press conference to release the update will be held by IMF Economic Counselor and Director of Research, Maury Obstfeld, the Deputy Director of Research, Maria Milesi Ferretti, and the Chief of World Economic Studies Division, Ova Selasson. The briefing is due at 0900 a.m. Eastern. That's about 2 p.m. GMT or about 3 p.m. here in Nigeria. Meantime, the IMF has blamed Nigeria's double-digit inflation on the country's challenges around foreign exchange and policies. In a document released on macroeconomic developments and prospects in low-income developing countries, that paper released at the weekend, the IMF attributes Nigeria's economic challenges to delayed policy adjustment. The IMF believes efforts of the Central Bank of Nigeria to defend the naira by forex rationing have gradually crumbled, and Nigeria's financial developments have affected neighboring countries like Chad, which is plunged into a recession, and Benin Republic. Let's take a closer look at these remarks by the IMF with Michael Famoroti, who was an economist at Vertivo Capital Management, is joining us from downtown Lagos today. It's good to have you on the program. Thank you very much for coming through.
Good afternoon. Thanks for having me.
Thank you. A very quick question and straight to the point. Does this comments from the IMF come to you as a surprise?
No, because I think it's well known that the international community hasn't been in support of Nigeria's efforts to defend the currency, and that this is not the first time. So when Christine Lagarde met with the fiscal authorities many months ago, that was the floating of the naira was high up on her list, and it's not surprising that these comments have now been made again.
Well, the IMF also pointed out the challenge of delay in policy decision making as a major reason for Nigeria's economic difficulties. So do you think this situation is changing?
Well, in terms of 2017, it's too early to tell. But I think from the fiscal side, there's an indication that the budget process will be attended to much quicker. So on the fiscal policy aspect, once you have the budget passed, then implementation becomes easier. Funding is something else that probably she was referring to when she pointed out at the slow pace of policy, and that is really an area where the test is still uncertain. So external funding efforts haven't borne as much fruit yet, and it's unclear whether that has changed so far. But I think on the fiscal front, there's some encouragement that things will be done quicker. With monetary policy, we'll just have to wait till the meeting next week or so before we can get a better view on policy direction and how aggressive they are going to be in trying to tackle this recession.
Well, in terms of the decision of the central bank to save the naira, the IMF latest report also says the rationing of the fast depleting FX reserve have contributed to the poor state of the economy. Now, what more do you think the central bank should be doing to save the naira and the market?
Well, I think the first thing is to get the priority straight. I'm not sure saving the naira itself is something that we should be going for. Really, we are looking to get a stable and fair currency to facilitate financial transactions in and out of the country, to boost the economy in general. So that has to be the aim. With monetary policy as well, price stability has to be central to that. So rather than focusing on how we can save the naira, which maybe we're falling into sometimes and has led us partly into the mess. We need to keep our focus on the wider aims of price and economic stability. And once we have those aims settled, then it becomes clearer as to how we can do this.
Thank you. Reiterating the issue of price stability and the fiscal economy side of things. Thank you very much for your time today. Michael Famaruti, economist at Vertivo Capital Management here in Lagos. So let's take a look at the markets here. The Nigerian stock market off to a positive new trading week on Monday, as well as the South African JSE, while Egypt sees red. Now look at the numbers there, and those are intraday at about 12:05 Nigerian time. Nigerian Stock Exchange about 0.1% in the green, 0.5% to the north for the South African JSE. The Egyptian market trading water. For today, when the markets open here, of course, the Egyptian markets open the week on Sunday. Sunday is a trading day in Egypt. That's off track by 0.75%. And the Kenyan Stock Exchange coming through from Fridays a negative 0.65%. Look at the broader Middle Eastern markets in negative territory this Monday in sympathy with Asia, Europe, and the pre-open stocks futures in Wall Street. Look at some of the GCC markets we tracked about an hour ago. That's Abu Dhabi, about 0.5% down. The Dubai financial market, 0.2% in the red. The Qatar Stock Exchange holding on to the 10,700, but off track by 0.2%. And the Saudi market, called the Tadawul Stock Exchange, having the deepest of the negative. 1.56%, lost that 7,000 psychological level last week. Europe is where we are right now, where the markets were lower today as investors await more details on the UK's Brexit plan. Prime Minister Theresa May is due to speak tomorrow, and the inauguration of the US President-elect Donald Trump on Friday. That's the 20th. My colleague at the Frankfurt Stock Exchange is Lars Halter of DWTV for Channels Television. Lars, it's good to see you. Let's kickstart from continental Europe, where the foreign affairs chiefs are meeting today in Brussels with a lot to chew over Brexit. The incoming US President Donald Trump speaking on trade, on NATO, on refugee crisis. Are those issues unsettling the markets, or are they already priced in?